Hello and welcome back to the Geordie Pig Investor channel. Today I'm going to be going through the new UK ISA 2024-2025. What are the benefits to a UK ISA account should you have one, and dive into a bit deeper today so that you might have a better understanding of if you should open up an ISA account for 2024-2025, or if maybe you've got some other priorities first that you might need to go through. And I'll just be highlighting all the benefits to having a UK ISA account. So let's get straight on to the video. What is a stocks and shares ISA? There are four types of ISAs which are currently a cash ISA, a stocks and shares ISA, an innovative finance ISA, and a lifetime ISA. Today I'm going to go through everything you need to know about the stocks and shares ISA for the new tax year. If you want to start investing, I would heavily consider you did do so through a stocks and shares ISA, and I would strongly recommend watching the rest of this video to find out exactly why. I'm going to go through all the benefits of what you need to consider if opening or using a stocks and shares ISA in 2024-2025. There's a couple of changes from last year, so just some things to bear in mind. And if you dislike the tax man, then I can assure you will enjoy this video. So what is a stocks and shares ISA, and how does a stocks and shares ISA work? Well, an ISA actually stands for individual savings account, and an ISA is the most tax efficient way of saving or investing your money in the UK. In a nutshell, any growth your money makes inside of an ISA account is actually totally tax free from the tax man. So even if down the line, say you were to put £10,000 into your ISA for the next 20 years and have over £200,000, and over that time it had compounded to say £1 million if you had some very good investments, then you would actually be able to take that full £1 million out of your ISA account and pay no tax at all. How good does that sound? Don't have to worry about the tax. So yeah, that's the main benefit to it. This is going to include not only just income tax, but also capital gains tax and dividend tax. How much does a stocks and shares ISA actually cost? Well, it isn't free like a cash ISA is, because there is some small costs involved with it, so you've got to bear that in mind. One of these costs is platform fees, so a fee that you will incur from the platform that you're using, and it can vary platform to platform, so you want to make sure that you're going to do your homework and check out the different platforms and see which one is best for yourself. But these platform fees can be an annually fee. It could be a percentage of the amount that you invest for the year, like say 0.25%, or it might be a flat fee for the year where it's like an annual fee of say £60, or like a monthly fee of say £9 a month. Another type of fee that you might have is fund management fees. So these are paid in addition to the platform fees, and it will cover expenses that come with managing an investment fund. They are typically charged annually as a percentage of your portfolio. Management fees can be as low as 0.1% for a passive tracker fund, where it's just mimicking the performance of a stock market index. So again, it's going to depend on what you're investing in. So again, you're going to want to bear that in mind. But this would be instead of paying for an active manager who would actually pick stocks for you and try and beat the market, which in this day and age and the success rate of these active managers isn't the best. So I would strongly recommend against that, considering how much money they try and charge you for it as well. Buying and selling charges. So this is going to be another fee. Many providers will charge a fee every time you buy and sell an investment. This is often known as a dealing charge. Providers have a wide range of charges depending on the type of investment it is. This will massively differ depending on the platform you use. So like I mentioned earlier, certain platforms have certain types of fees. It's going to be really important for you to look around and make sure you're finding the best one for yourself. I know which ones I prefer myself because I've had a good look, and I may do a video in the future going through and analysing which ones have the best fees and which ones I'd recommend. If you'd like to see a video on that, leave it in the comment section down below. Moving on, we have got the benefits to a stocks and shares ISA. The main advantage, as previously discussed, is the fact that your money is sheltered from tax, but there's also some other benefits to consider. First main benefit, it's actually £20,000 per year that you get, which can be invested tax-free, and that is going to be for every single year. So it's better than most countries, so we are quite lucky to have that £20,000 allowance. We pay no income tax on the profits like mentioned, no dividend tax, no capital gains tax, and you don't have to declare the profits on your tax returns, which is saving you a lot of time and a big headache. The only tax you'll pay in an ISA account is the stamp duty charge every time you buy a stock. You've got to pay a small fee of 0.5%. This is something that I would quite like to see be either removed or reduced, as I feel like 0.5% is a little bit high, but For now, that is something you do have to pay, and as a whole, if we compare to when you used to have to invest, say 30 years ago, and how hard and expensive it was back then, we are very lucky to have an account which we can have such minimal fees in. Your investments are also safe if the government decides to cut the tax-free allowance for capital gains, dividends or interest. So if they were to say get rid of the ISA next year, anything that's been put into it up until this point would be protected. What are the rules for a stocks and shares ISA? Well, there is some rules to be aware of. The first one being you've got to be over 18 and a UK resident. You can actually open up a junior ISA for a minor. If you were, say you're watching this video and you're under 18, you could ask your parents to open you up an ISA account. Or if you have kids of yourself, you might want to look into opening them an ISA, because there's going to be some real long-term benefits for themselves, especially with them being a junior. You're going to be able to have that longer amount of time in the market, which in theory is going to mean that they're going to have bigger compounding, and they should be able to make a lot more money the longer that you are in the market. So you currently have an allowance of £20,000 each tax year, which we've already mentioned, and there may be an additional £5,000 added hopefully added at some point this year, but it's not looking likely anymore, as the general election is coming up, and it's looking like it's going to be after that. And if a different party was to come into Parliament, then that would actually potentially change this. So I wouldn't bank on that extra 5,000, but it was something that was said in the recent spring announcement. The allowance cannot be carried forward to the next tax year, so you either use it or lose it. So you can't say use 15,000 of your allowance this year and then think, oh, I'm going to use 25,000 next year. If you don't use the full £20,000 this year, all you get is the following 20,000 the next year. So following you wouldn't get that additional money carried across. And in previous years, you could only have one stocks and shares ISA this tax year, and that is that you can open as many stocks and shares ISAs as you want. So you could have 10 stocks and shares ISA accounts open if you really fancied. I'd personally suggest sticking to just a couple of them, not having really more than 2 or 3, because it's going to be hard for you to actually track where your money's at, what you're invested in, and how much money you've actually put into your ISA accounts. And if you were to exceed that 20,000, there is a penalty with that. So you're not allowed to exceed that £20,000 limit. So you wouldn't want to, be spreading it across a few of them and then accidentally going over that limit. That would not be good. So getting on to the more important questions: is it actually worth getting a stocks and shares ISA? Well, when investing, it's really important that you can confidently invest that money and leave it for at least 5 years to give it the best chance of growing. Here's a couple of things to really consider before, getting into a stocks and shares ISA. Personally, I would look to pay off your debt. In general, it is better to pay off expensive debt before investing any spare savings. For example, if you had an interest rate on a credit card or an overdraft, it usually tends to be about 20 to 40%. And it's very unlikely your investments are going to outperform this. So I would be sorting that out first and trying to make sure that you pay off all that debt. As annoying as it is definitely going to benefit you long term. And you don't want to end up getting crippled by the debt and then having to sell all your stocks and shares anyways to have to pay it off later down the line, where it's compounded over into a bigger debt amount. The next thing I would consider is you need to have yourself an emergency fund. It's best not to have all your savings in the stock market in case something was to go wrong. Say you were to lose your job, your car was to break down, something bad was to happen like that. You would then need access to your savings and would have to draw from your investments, which totally defeats the point in actually putting money into the stock market, like I've just mentioned. So try and save up an emergency fund that is enough to cover all living expenses over the next 3 to 6 months, and have this money in an easy access account so you've always got access to it. From here, you're going to then have that safety net and probably have real peace of mind when you're going to sleep at night, because if anything happens to your car, to your job, anything like that, you can leave your money invested in the stock market and try and get yourself sorted with that emergency fund that you've got built up. Finally, check the affordability. So investments into an ISA, like we've gone through a couple of times already, is supposed to be for long-term savings if you really want to get the benefits from it. So you want to make sure that the money you're putting into that account, you can actually leave in there. So don't leave yourself short every month trying to put in money which you're going to end up having to pull out to, even if say you like to go for a takeaway once a week. If you're going to try and invest that money at the start of the week in the stock market, but by the end of the week you're withdrawing it to buy a takeaway, it's absolutely a waste of time. You want to make sure that you can live in comfortably with your investments, and that can be different person to person. So even if it's just £50 a month, it's a starting point, and trust me, it'll go a lot further than you may think. How to invest with a stocks and shares ISA. So now we've cleared that up, there's a couple of ways you can actually invest into a stocks and shares ISA. Self-invested stocks and shares ISA. So if you prefer to choose the investments yourself, then a self-invested stocks and shares ISA is going to be a better fit. You can actually have something else called a ready-made stocks and shares ISA. If you don't feel as confident on picking the stocks yet, then you could have one that's made for you, and something like a robo-advisor would pick them based on multiple factors such as risk tolerance, your morals, and a few other factors. They would ask you a few questions and then they would pick a portfolio based on that. Personally though, I would always stick to a self-invested ISA, as I see it as being a lot more beneficial, and I see the additional fees as being unnecessary, especially with the information out there these days. Something as simple as an all-world ETF or an S&P tracker ETF like VUSA or VWRL would be a great starting point, and it would take the thinking process out of it as well, because these funds are very, very easy just to set and forget, put the money in there and leave it there to grow over time. There are two main methods for investing, which are known as drip feeding your money or contributing in a lump sum. So the first one is drip feeding, and you will benefit from something called pound cost averaging, more commonly known as dollar cost averaging over in America. And this is easier to get your head round and reduces the risk because you're going to be buying over multiple weeks. So what it is putting in, say, £100 every single Monday and doing that every single week, regardless of what the stock's actually doing. So it's going to be a lot easier to get your head around that, and sort of makes you feel like the risk is a lot less because you get more of the average price of it. However, if you do look at studies historically, it's actually been more beneficial to lump sum into something like a stock or an ETF, depending on which one it is. But again, it's down to your personal risk levels and what you're ultimately comfortable with doing. So, what stocks and shares can you actually buy within an ISA? Well, most platforms offer lots of different types of stocks and shares within their ISAs, but they will offer different ones. So there's certain platforms that may only offer ETFs, there's ones that may offer only stocks, there's ones that offer both, and then there's ones that will offer different types of bonds, etc, etc. So what I'm going to go through now is just the different types that you can actually get within your stocks and shares ISA. First one being shares, where as long as the platform offers that stock, you can buy as much as you want of it, obviously up until the £20,000 limit. Like I've just mentioned there, you can also buy something called bonds within a stocks and shares ISA. This is effectively where you lend your money to companies or the government, and it's going to be for a set period of time in return for interest payments from them. And finally, you can also invest into funds or investment trusts. So, for example, an ETF would be one of them. But what that is where your money is pooled with many other investors, and you can buy into a lot of different companies across the UK or the world or wherever you fancy. If you want to buy some companies and stocks from Planet Mars, you can find a platform that's supporting that. Go for it. I think you would struggle to find it, but you can buy them from anywhere. It is likely a safer and easier way to spread risk rather than trying to buy loads of individual shares. So it is something to bear in mind that sometimes going down the funds or investment trust route is going to be a little bit easier to manage. How are investments outside of the ISA taxed in comparison? Well, any investment outside the ISA is unfortunately taxed a lot sooner, and it has only started to get worse the last couple of years. For example, capital gains tax in 2022-2023, you could actually make up to £12,300 before you were hit with tax. Doesn't sound too bad, right? Well, it was reduced to £6,000 last year, and it has now been cut again to a further only £3,000 for the coming 2024-2025 tax year. So once you earn over £3,000 in capital gains, you will start to pay tax. Similar story here with dividends, where you were actually able to earn £2,000 in dividend payments back in 2022-2023. Surprise, surprise, it was cut to only £1,000 last year, and it's cut further again to only £500 this year. The amount that you'll actually pay in tax depends on what rate taxpayer you are. If you're a basic rate taxpayer, you're going to pay 8.75%. If you're a higher rate taxpayer, it's 33.75%. And if you're an additional rate taxpayer, unfortunately, you've got a massive 39.35% to pay on dividend payments. So that is another reason why it's so important to get in a stocks and shares ISA account. We've also got income tax, which is interest that you earn on your savings and cash. And a basic rate taxpayer is going to be able to earn up to £1,000 a year in 2024-2025 before they have to pay any income tax. Higher rate taxpayers can earn up to £500, and additional rate taxpayers unfortunately can't earn anything, so they'll be paying tax straight away on any personal savings. Will you make your money back with an S&S ISA, or will you lose it all? Well, let's just start off and say there are no guarantees that you'll make your money by investing in stocks and shares ISAs. Everyone knows this. At the end of the day, it's up to you to pick your stocks and your shares, and depends what you're going to be invested in and how long you're invested for. But with that being said, if you do try and diversify your range of investments and remain invested for the long term, there is a high probability that you will make money on those assets. If your investments are successful, historically you should be able to earn more than you would with it just sitting in a savings account. According to investment bank Goldman Sachs, the US stock market has averaged a 10-year return of 9.2% over the past 140 years. So if you stay invested for any 10-year period over the last 140 years, you're averaging a return of 9.2% per year, which is so high. I haven't gone into talking about inflation today because I'm going to save that for another video, but it does have a major role to play in why it's so important to be receiving returns greater than 5%, as the average inflation rate over the last 50 years in the UK is actually about 5.2%, so it's very important to try and beat that number. Just remember, your capital is at risk, but you only actually materialize a loss if you sell that investment for less than you paid or it goes bust. So try not to panic if you see your stocks going at the red, and look at it as an opportunity to buy more of the stocks potentially if it's at reduced prices. If you're confident in that stock and you know that it's a reliable stock, then why not buy some more if it goes into the red, because that's technically saying it's at a discount if you're confident in that stock. So just bear that in mind. And finally, I hope you've enjoyed this video and taken some useful information from it. Please let me know of any questions in the comment section down below, and thanks for watching. This is the Geordie Pig Investor, over and out.